Hi, and thanks for tuning in. This video is meant to be a simple explanation of your Illinois property taxes. If you are lost when you get your home assessment statement in or your property tax bill, and you're just not 100% sure about the terminology or the basic process in terms of how you are taxed on your home, this video is basically made for you. Now, this video is divided into three sections, and actually three separate YouTube videos, so they don't get too long for you. The first one, Part A, is a simplified explanation using layman terms of how to read your home assessment and your property tax bills. It includes a timeline of the taxing process. Now, if you don't quite get it, even after reviewing it, there's actually another part, which you could even fast forward to if you want, and that's Part B, which is a simplified tax example and gives a discussion of how your taxes might go up. Then there's Part C, another video, appealing the assessed value of your home. Now, all of these are loaded up to a playlist, and you can just watch them in a row or perhaps fast forward and click to them. That's the beauty of YouTube. Now, that of course begs the question, who is presenting? This is not an elected official or some type of persons with certifications. This is just a McHenry County resident. I'm not for a political party or a candidate. This is not a hit job on anyone. Basically, a few years ago, I was part of a group that tried to understand some insane property tax bills. And there were two things that we learned. First, the taxing process is very complex, but also there's not a real simplified explanation of how it all works. There's a ton of great information on the web, but you do have to spend hours kind of sifting through it. Hence the purpose of this video. I should point out, though, that this is something that has been researched and confirmed with local tax officials and assessors. And here are some resources online if you want to learn more. All the training materials for the board review or for becoming a certified assessor are online. So you can look at board review, basic coursework, stuff from the Illinois Department of Revenue. There's Introduction to Residential Assessment Practices, as well as materials from the International Association of Assessing Officers. And also cited is the Illinois Property Tax Code and case law, as well as county assessor websites and others. So before we get started, a couple of key terms you probably want to remember. First it's the term tax levies. And that's pretty simple. It's the money used to fund different government entities, such as police, schools, etc. Then there's assessments. This is valuation of your home, but for tax purposes. So it is different from, say, an appraisal for a bank. And the key term for assessments is uniformity. All homes must be valued uniformly so that we are taxed uniformly. And that's not just me saying it, that's the law. There's the Illinois Constitution, Section 4. Taxes upon real property shall be levied uniformly by valuation as ascertained by the General Assembly. Then there's fair cash value versus assessed value. Now, the fair cash value is the market value of your home as determined by the local assessor. The assessed value is the fair cash value divided by 1/3. And the assessed value is what you are taxed on. So, for example, if there's a home that's given a fair cash value of $300,000, the assessed value would be 1/3 of that, or $100,000. Now, there are several key players for the taxing process, but we're just going to focus on three for this video. The first is the township assessor. That is typically an elected position that determines the valuation of properties within a given Illinois township. They also maintain and update property books as well as a few other responsibilities. Then there's the county assessor. Now they receive assessment books from each township assessor in the county. They review and possibly modify them and also equalize assessments across different townships. We'll explain what goes into that in a bit. Then there's the county clerk, which is an elected position. They basically accumulate the tax levies and then the assessments, and they determine everyone's tax bill. Now, this is an example of townships in a county. This is McHenry County in the northwest suburbs of Chicagoland. And as you can see, this has actually 17 townships enclosed within the county. Now, it should be noted, this set of videos is focused on taxes for residential property in Illinois. There's also taxes for business, of course, commercial, and for farming. That's not really covered here. If all of these things were covered, the video would probably be about 6 to 7 hours long. Also, it should be noted, in case someone on the internet pulls this up and they happen to live in Cook County, which is, of course, where Chicago is, their tax approach is different. For example, The assessed value of a home is 1/10 of fair cash value, as opposed to 1/3 for most other counties. Also, the county assessor there is an elected position, as opposed to appointed. And homes there are assessed every 3 years. So let's start with Part A, reading your assessment and your property tax bill. First thing, again, how your property tax bill determined. It is a Rube Goldberg machine with a lot of moving parts and a lot of factors. But it should be noted that not one person is responsible for your tax bill. And the first thing we'll talk about is the tax mechanism. There's 4 basic steps on how you're done. And again, in Part B, we go into this in more depth. But there's the 4 main parts. First, the government bodies determine the tax levies. Then the second part, the local assessors determine the total assessed values of all the properties. Then Part 3, this is by the clerk. They determine the tax rate, and the tax rate is tax levies divided by total assessed values. And then the 4th step, calculate the tax bills for each property. So let's do a quick review of the timeline for the taxing process. This basically takes about 18 months to 2 years. So at the start of any particular year, you have 2 parallel actions happening. Again, you have the taxing districts and you have assessments. First, with the taxing districts. Typically in the first half of any given year, the taxing districts, such as schools or for fire, set budgets for the next year. Then, in the latter part of the year, they'll determine the tax levies and then inform the county clerk by the second Tuesday of December what those are. Meanwhile, on the assessment side, typically in the first half of the year, the township assessor is making valuations, then turns in its books to the county assessor by June 15th. The county assessors then review books, make adjustments, and set the equalizers. We'll explain what the equalizers are in a second. Assessment notices are mailed, and then the residents have 30 days to appeal. So here's what a typical property assessment notice looks like, at least for McHenry County. Now, if you look up close, there's a couple of key factors. First, in the upper right-hand corner is the parcel index number. That's basically an index number recorded at the county for your property. They of course, have your address, but this is their typical way that they index you. Then on the lower left-hand side, you'll see property type. The 2 most common pieces are, of course, the land lot or the farm home site, then the buildings and structures, at least for residential. Now, if you look in the lower left-hand side, it'll say the full fair cash value for that year, which in this case is about $347,900. Then in the middle, you will see the township assessor valuation. So that's what the township assessor determined the value of your property for that particular year. Just to the left of that is the previous year's valuation. So let's talk about the township assessor first. For Illinois counties under 3 million in population, township assessors are elected officials, but they do require a certification, typically by the Illinois Property Assessment Institute. And then what assessors typically do is revalue properties every 4 years. That is termed a quadrennial. The last one was in 2019. The next is 2023. This is being recorded in around 2021. So they determine what the fair cash value is of each property on January 1st of that year. Now, township assessors have other jobs as well, such as surveying properties, especially new ones, and maintaining a property record system. This is also just a public service announcement. You probably want to go online to your local township assessor and check your property record card and make sure that is correct. For example, if a square footage that is too high, that could potentially mean that you have a higher tax bill than what you should. Now, it should be noted, assessments are opinions of value, so they can vary from assessor to assessor. Now, for valuing property, there are 3 basic approaches. The first is called the income approach, and that's what's typically used for businesses, farmland, apartment buildings, where, of course, income from renters is generated. It's not typically applied to residential. Then there's what's called the cost approach. That's where an assessor makes a determination how much it would cost to build your home from the ground up and then adjust for depreciation plus other factors. Then there's a third approach, which is typically the most common one, called a sales comparison or market approach. And that's where assessors use recent sales data to determine the fair cash value. So for the market approach, or even the cost approach, there are several key factors. First for the land, factor could be the neighborhood. Factor, of course, could be the location. Do you back to a golf course? Are you perhaps near the freeway? The size of the property. Then, of course, there's the structure, which can also be called the improvement. And their key factors are, of course, square footage, the number of garages, the size of your deck or patio, the number of bathrooms, the age and condition of the structure. And there's a myriad of other factors as well. So now, the market approach, we'll try to give just a quick Cliff Notes version of this. But here's how the market approach might be used. Let's say in a typical neighborhood, 2 garage homes are selling for $300,000. But the same homes with 3 garages are selling for $350,000. So naturally, an assessor might peg the value of that third garage at $50,000. Or let's say you have a home on a quarter acre selling for $300,000, but the same home on the same size plot that backs to a golf course is selling for $375,000. So the premium for backing to a golf course might be $75,000. Now that's a really simplistic point of view from that. Of course, when you have neighborhoods where there can be dozens, if not hundreds of sales, and none of the homes are alike, there's many factors that go into it. The age of the home, the square footage, the basement. And what the assessor will do is basically view sales of similar properties and adjust, based on those particular properties. It should be noted, though, that foreclosures or short sales or any kind of non-arm's length transactions aren't typically counted. Another thing that township assessors might do as well, especially in larger, more populous townships, is do a mass equation, formulated based on sales data, statistical analysis, and other factors. For example, in one particular neighborhood, it might be $30 times square footage plus $2,000 times the number of bathrooms, or $25,000 times the number of garage spaces. This is what they determine on their own, looking on the data they have entered into their database or software. Now, the key thing for assessors, because again, methods can vary. The key question is, are they being uniform in how they are applying it? Now, the thing is, assessors, they must be open and transparent about how they are doing it. And the thing is, 99.9% of assessors are openly transparent about it. For one thing, those property cards and any other kind of sales data, those types of things are available online on the local township websites. And it's also the law, the Illinois Property Tax Code 35 ILCS 209-30, tax maps, ownership lists, valuation standards. The record shall be available to all assessing officials and to the public. Now, key factors to check your assessment. First is what's called sales dollars per square foot. And that's just the sales price divided by square footage. So let's use an example. Suppose that the local assessor gave your home, that is 2,300 square feet, a fair cash value of $340,000. So sales dollars per square foot would be $340,000 divided by 2,300, or about $148 a square foot. So now you look up the street and you see that a similar 2,000 square foot home recently sold for $250,000. So $250,000 divided by 2,000 is just $125 a square foot. So something like this, where perhaps there's a significant difference in the dollars per square footage, might be grounds for an appeal. Now there's another one called improvement per square foot, and that's the assessed value of the structure divided by square footage. This is a good check to make sure that there is equity or even equity across different homes. So take an example. Suppose your 2,500 square foot home was assessed at $100,000, and that's where the value of the land was $25,000 and the structure was $75,000. So the improvement per square foot would be $75,000 divided by 2,500, or $30 a square foot. Now you check up the street. A nearby structure of a 2,230 square foot home was assessed at $66,000 for the structure. So $66,000 divided by 2,230, that's about $29.50 a square foot. So that's pretty close. And that might give a sign that, okay, perhaps your assessor took care of your neighborhood uniformly. Now, some things to watch for. One is a factor called sales chasing. Sales chasing is when an assessor revalues a home to a recent sales price instead of valuing it using a mass appraisal method, like what was just explained. Now, this can create assessment inequities, leading to higher tax bills for a sales-chased home. Now, assessment standards dictate that recently sold homes and unsold homes must be valued using the same methods. So I'll give you an example of how sales chasing can cause inequity. Suppose you have a neighborhood where a 2,000 square foot home with 2 garages is assessed at $300,000 fair cash value or $100,000 assessed using a mass equation. So that's about $150 a square foot. However, one home sold last year at $330,000, and the assessor adjusted just that home to the sales price. So for that particular home, the assessed value would be 330 divided by 3, or $110,000. So now, the tax for the unsold homes would be 100 grand times, let's just suppose the tax rate is 8%. So the tax dollars would be $8,000. But the tax for the recently sold home, $110,000 times 8% would be $8,800, or $800 higher. If you'll see what the problem is here, the only punishment of that particular home is that they bought recently. Now, assessors who sales chase, their typical reasoning goes along the lines of, quote, we are here to determine fair cash value of a home, what could be closer to fair cash value than a recent sale, unquote. Now that makes sense, but however, as that example shows, there is a lack of uniformity when you do something like that. And Illinois courts have ruled against sales chasing. The case is called Walsh versus Property Tax Appeal Board, and this is something you can Google to get the full detail on. But in a nutshell, a home was adjusted to its recent sales price, and other homes that hadn't sold were assessed significantly lower. The homeowner sued, and the court sided with them. The quote here, at issue is whether, as a matter of law, removing one particular parcel from the system and subjecting it to a different method of valuation in order to increase the assessed valuation of that property violates the constitutional requirements of uniformity of taxation and equal protection. We hold that it does. Now, another thing to watch for is reassessment in a non-quadrennial year. Now, the property tax code states that most township assessors should revalue every 4 years, and the only exceptions is if there's an assessment error, then of course they can make a correction and reassess. If there's a change to a home, so for example, if you put an addition onto your home, or perhaps add a pool, that adds value to your home and it has to be reassessed. Or if there is damage to your home, such as a flood or a fire, that of course loses value for your home, and that can lower the assessment as well. However, there is a clause in the Illinois Property Tax Code, revisions of assessments. The township or multi-township assessor of any township in that county may in any year revise and correct an assessment as appears to be just. Now that sounds pretty vague. So sometimes if there are extreme market shifts in home values, some assessors think they should reassess. And the problem is if some do it and others don't, you can have assessment equity issues there. And Illinois courts have ruled against this as well. The case here is called Albee versus Sote, and you can Google that as well. Here, a home was revalued in a non-quadrennial year, and the homeowner sued, and the courts ruled in their favor. And it was pretty concise. The court said, Section 975 permits an assessor to revise and correct an assessment as appears to be just. The assessor does not have the authority to revise or correct. If the legislature so intended, it would have so indicated. Okay, so now back to the property assessment notice. You'll see there's another factor here that says equalized assessed valuation. This is what the county assessor has done with your valuation. And again, it's typically an equalization. If there's been other adjustments to your assessment by the county assessor, those will be listed in the box there. The next step in the assessment process with the county assessor. Around June 15th, the township assessor sends their assessment books to the county assessor, and all of the township assessors do this. The county assessor then reviews them and is authorized to make changes if they see fit. Then they set what are called the equalizers, so that assessments are even across townships. Now, how do you do this? Okay, for the equalizer, one of the key metrics they look at for setting the equalizer is called a sales assessment ratio. And that's a simple calculation of the assessment of a home divided by the recent sales price. So every time a home is sold during the year, the office will take the sale and do a sales ratio calculation on it. Now the target for the township and for the county is 33.3%. So, for example, if a home is assessed at $100,000 or has a fair cash value of 300 grand, then it sells for 300 grand. The sales ratio is 100,000 divided by 300,000 or 0.33 or 33.3%. Perfect. That's great. Now, let's say the sales ratio on a home is less than 33.3%. Then the home is underassessed. So, for example, let's say a home sells for 325 grand and it's assessed at 100 grand. Sales ratio would be 100 divided by 325, 0.307 or 30.7%. Or if the sales ratio is greater than 33.3%, the home could be overassessed. So suppose a home sells for 250 grand and it's assessed at 100 grand. So the sales ratio there would be 100 divided by 250 or 0.4 or 40%. So for every township, the county assessor takes the average sales ratio for the past 3 years of all those particular sales. Now, it should be noted they do other factors as well. Again, we could spend a couple of hours talking about all the different data that they look at. We're just trying to keep it simple here. And the county does this every year, even non-quadrennial years. So what they do is they then apply an equalizer to even these out. So let's say Township A has a 29% sales ratio. An equalizer greater than 1 will be applied. And then let's say Township B has a 35% sales ratio. Then an equalizer less than 1 will be applied. So then what you see is, let's say in Township A, the equalizer of 1.07 is applied. The new assessment would be 100,000 times 1.07 or $107,000. Now the equalizer would be applied to every single residence, within that township, not just a group of them. So here's why the equalizer is important. That's because tax levies are spread across different townships. Therefore, assessments must be uniform across those different townships. So for example, Crystal Lake, that occupies 4 different townships, Dorr, Nunda, Algonquin, and Grafton. So if assessments are uneven, the tax burden for a home in Grafton Township could be different from the same home in Algonquin Township. And that's why they apply the equalizer, to at least get it as even as possible. It should be noted, too, that counties can be equalized to by the state of Illinois. The Illinois Department of Revenue reviews sales ratios and other data to ensure that counties are uniformly assessed. And that's because tax levies can be spread across different counties. A great example would be Del Webb, Sun City, and Huntley. It is actually split between McHenry and Kane counties. However, both sections of Del Webb are paying into levies for Huntley as well as Huntley schools. Therefore, you want to make sure that the assessments on both sides of that border are even. So now going back here, you'll see that the equalizer, at least for this particular home, is on the lower right-hand side. Now, another thing you should note, too, for your assessment notice is homestead exemptions. Now, basically, these are discounts that can be applied to your assessment. So, for example, there's a general homestead exemption. If you live in your home, that is a discount of $6,000 assessed value. But you also have senior citizen homestead exemptions, assessment freezes, as well as home improvement exemptions. Also, if you're a veteran or a disabled veteran, you would be eligible for exemptions as well. What you want to do is contact your local township assessor to see if you are eligible for these. Okay, so now we're going to return back to the timeline for the taxing process. Now again, assessment notices are mailed. You have 30 days to appeal. We're going to talk about that in the third part of this video. So then, after the appeals are turned in, the next step is that the appeals are reviewed by the County Board of Review, and then the judgments are made. That takes a couple of months. And then assessment books are finalized after those values are updated, and then those are sent to the county clerk. The county clerk then determines the tax rates based on the tax levies as well as the assessment books. And then tax bills are mailed by the county treasurer. That's typically around May, and then the first installment of your property taxes is due June 1st. So here's a typical copy of a property tax bill. Now, hopefully with the information that we've disclosed so far, this makes a little bit more sense. So if you look on the left-hand side here, those are all your different tax levies. and their tax rates. And then you'll see here, those are the particular rates that are set, and those are calculated again, taking the entire tax levy that's required, dividing it by the equalized assessed valuation of all the properties within that tax levy district. So here you have for McHenry County, you have for a local school district, you have Algonquin Library. Then at the bottom is your total tax rate. Then if you also see there's also a percent. Now that's a percentage of your tax bill. And if you'll see, like, for example, McHenry County takes up 6.53% of your tax bill. And the McHenry County Conservation District takes up 2.21% of this particular tax bill, totaling up to 100%. Then on the right-hand side here is all the information, part of it from your assessment statement. So if you see up top, that's a township assessment, and then the equalizers as set by the county. Then down here is the board of review valuation. So here, if you perhaps won your appeal and got it lowered, that's where this particular figure is going to show. The board of review could also potentially have a multiplier as well, and then you have the equalized value. Then if you'll see, here are all the exemptions and reductions, and also there is also, if you'll see in the middle there, the state multiplier in case the state applies an equalizer. In this case, it was not. And then if you'll note at the bottom, it says net taxable amount. So that is the number that you are taxed on. And then there's the local tax rate, and then on the lower right-hand side there is your tax. And it's also there at the bottom of the box for the tax levies. So this is in essence what your property tax bill shows. So that concludes part A of this video. For part B, which is a simplified tax example, just click on the I in the upper right-hand corner, or if you're watching this on the playlist, just stay tuned. Thank you for watching.